Hey everybody, happy Monday and welcome back to the Landry team's Mortgage Market Monday, a week in review. Last week was fairly slow regarding the reports that came in. The one that had the largest impact was the CPI, and I'm going to hand the spotlight over to Kurt to fill you in on that.
Thank you, Jennifer. As she said, the CPI came in at 3.2%, which was higher than June's report at 3%, but less than the 3.3% expected. The core CPI came in line with expectations at 4.7 and matched the June CPI. Year over year expectations were 4.8%, so we did come in slightly under that projection as well. So what's the Fed saying? Well, it still appears that the Fed is very hawkish on increasing rates to tame inflation even further. They're absolutely stuck on this 2% number that they won't get off of. This is definitely causing the markets to be very cautious in keeping rates in a range moderately up from mid-month last month, but slightly better than where they opened in July. So we do have some major news on the docket this week. It'll be the minutes from the July 26th Fed meeting, where we'll kind of see if the Feds are leaning more towards more rate hikes or a pause. Other items that'll weigh in on that decision will be the job report numbers. The Feds seem to think that they're not seeing enough underlying weakness in the jobs data to curb the rate hikes, even though most of the jobs being created are part-time. I mean, truthfully, we actually lost 600,000 full-time jobs. We did add 900,000, but most of those were part-time jobs. So the jobless claims report this week will hold extra importance as it does encompass the sample week factored into the BLS job estimates in their modeling and has shown a rise in claims, but we will have to see if that's an outlier or a trend of higher claims to come.
So overall, rates seem to be trending higher, and there has been no real game changer in the numbers to say when that trend will start to level off. Keep in mind, as we've continued to reiterate, there are upsides to an elevated interest rate environment. We're seeing downward pressures on home prices and sellers showing a willingness to negotiate seller concessions. If you are paying rent now and seeing increases in rent, seize on those opportunities in the market now, and if rates drop in the future, refinance to a lower rate. It's not a bad idea to start growing equity. If you are waiting on rates to drop, as many people are, be ready to join quite a few folks entering the marketplace with low inventory if and when rates do dip. You'll likely be stuck buying at a higher price with limited negotiation ability for price or seller concessions. I hope everyone has a wonderful week. Thank you so much for joining us for another Monday Market Update. And we will see you next week. Don't forget to hit the like button, notification bell, and subscribe for more if you like this content.